Welcome to the podcast series Talking Success, connecting the global FinTech community. I'm Stacey Jafta, and today I'll be chatting with Kirk Drake, founder and president of Ongoing Operations and author of CU 2.0. Ongoing Operations is an outsourced business continuity, disaster recovery, secure hosting, managed security, and managed telecom for financial institutions and FinTech providers. Hi, Kirk.
Good morning.
Morning. Well, it's actually evening for me, morning for you, but welcome. I'm so glad we got to make this happen. I know it's kind of bright and early, but you mentioned heading to the gym already, so this seems like a normal routine for you.
Yeah, I probably about 3-4 years ago, I got really focused on, I remember this just funny like childhood piece where my parents were always after me to get better grades. And I was always, I was like a B plus student. And so finally one year, about midway through high school, they're like, why don't you just prove to us that you can get A's? And so for one semester, I was really disciplined and I got straight A's. At the end of the semester, they're like, well, how'd that feel? It's like, that was good. Like, well, what are you going to do going forward? I'm like, I'm going right back to what I did before. That was totally not worth it. and so ever since the last 3-4 years, I've been in that A. I just decided I was like hitting my 40s. I was like, you know what? It's going to be an A year from now on, and I'm going to be disciplined, and I'm going to get up every morning, 3-4 days a week at 5:30, go to the gym, and just be in that discipline. So.
Yeah, there's this massive trend. I'm not sure if you look at TikTok or YouTube, but there's this massive trend on a YouTuber's daily routine. Mm-hmm. And it starts with waking up at 5 a.m., watching the sunset, an ice cold shower, and it goes on to all these things that the billionaire does every single day. And it's a little bit comical, but there is some truth to it. I definitely think that waking up early gives you some more time for the day, some more time for yourself, and kind of control of how you want to set out your day to be, and getting a nice workout in. Who wouldn't like that?
Yeah. No, it's all about the habit, right? Like my goal is when I wake up, when the alarm goes off, I have one rule, which is I must put on gym clothes. And then the second you have gym clothes on, you're like, I kind of have to go to the gym because it would be stupid to put on gym clothes and immediately take a shower.
Exactly. Well, Kirk, I'm a little nervous because we both seem very chatty right now, but let's just dive right in. I want to hear more about your career journey and essentially what led you to build Ongoing Operations and then also write your book.
Sure. Yeah. So I'll try to make this brief. So weirdly, in high school, I was asked to start a high school student bank. I said no. My dad overheard the conversation and was like, because this was pre-cell phone, because I'm old. It was like, hey, go ahead and make that call back and tell the teacher you'll do it. And then we had a long chat about, careers and all that kind of stuff. I was probably 16 at the time. And so I started this high school bank in a small town in Southern Oregon. It was strangely successful. We had probably 10 times the number of accounts as the other two regional student banks that were created.
Wow.
And then I got to college, and because I wasn't running a student bank, I suddenly had a girlfriend, and realized that the meager $1,000 I had saved from working at this bank over the summers wasn't going to last very long in Washington, D.C. And so I immediately applied for a bunch of banking jobs, and nobody called me back. I started freaking out, realized I put the wrong phone number on my resume. So I applied for a bunch of credit union jobs at that point, because I was too embarrassed to reapply for the same bank jobs I had applied to before. Started working at a small credit union, fell in love with it. Turns out, it was the mid 90s. So if you would graduated high school with a computer, you were more qualified than 95% of the workforce for some reason.
Yeah.
And so after they had me train all of the credit union was converting to a PC-based system. So they had me training everybody in the credit union on how to use a mouse.
Wow.
Which was just, I just thought this was the funniest gig ever. Right. And so, and it was, by the way, it's exceptionally difficult to take someone who's 50, 60 years old and never seen a mouse before and teach them click versus double click. Right. Like that.
Oh, 100%.
That is not a native instinctful thing. In that I think my mother, who's in her 70s now, still can't do it quite right. Everything's a double click. So there's always two web pages up of everything. And so I ended up working in this, it was a small community kind of financial institution at the U.S. Department of Agriculture. and kind of fell in love with credit unions and went to work for Fiserv, which is a huge, one of the largest, I guess, FinTech companies out there. They took 9 people to approve a $3 stapler. So I was like, this is not for me. And
so efficient with their processes.
Yeah, exactly. I was 21 years old, and I was just like, I can't see spending 50 years of my life, dealing with this piece of it. I'm sure they're not like that now, but anyways, so I left and went back to working at a credit union that's about 2-3 times larger in the DC area, and they had me basically modernize them, get them to 2000, 2001 timeframe technology-wise in the first 2 years. And then they promoted me to CTO and said, at this point, I was 23, 24.
Crazy.
And they're like, hey, that was awesome. Let's double down on that, and we want you to get us to the bleeding edge. So 2001, 2002, we had this credit union had all electronic signatures, not a single physical document in the organization. We were all electronic. We had online banking, mobile banking on a trio, which of course didn't work at all. Every time the phone rang and you were looking at online banking, the whole thing blew up and, and crashed. And we had, everything was fully digitized in 2002, 2003 timeframe. VoIP phone centers with calls.
So ahead of its time.
Pops. Yeah, but I was quite honestly, I was like, okay, this is cool. But they came to me and said, well, hey, if you stick around till 2037, you can retire with 65% of your income. I was like, it's 2002. I don't think that's going to happen.
Really.
So I decided I would start Acusa, which is a credit union owned company, because this was kind of after 9/11, and we really saw how painful doing disaster recovery was in kind of the old model at that time. And so this was right when VMware was coming online, and we said, well, could we get 7 credit unions together that would share a virtualized platform for doing offsite backup and recoveries? And kind of nobody really believed that we'd be able to do it, but we decided to kind of jump in at it, and the 7 credit unions put in the seed capital, and we figured out how to do that so that everybody got exactly what they knew, but it was all a shared platform from a back-end resources perspective. And that company grew to what ongoing operations is today, which does disaster recovery, telecom, cybersecurity, hosting for about 150 credit unions around the US. And I was probably, 2013, 2014, started really working with a guy named Paul Fiore, who had started Digital Insight, which is, IPO'd as one of the largest online banking providers and still one of the largest online banking providers out there today. And he and I started working on a concept called CU Wallet, and the credit union ownership was comfortable with me working on kind of other things that weren't necessarily germane to ongoing operations core business. And so we created this mobile wallet platform that was pre-Apple Pay, partnered with a company called Paydiant that ended up getting acquired by PayPal, had Level Up integrated, had some really cool pilot cases, exited that, and realized that I really liked the consumer-facing side of technology and FinTech a lot more than the back office side. And I said, all right, well, I had a pretty successful launch with Ogo in my 20s. CU Wallet now has worked well. There's these lessons you learn in kind of entrepreneurship. And so watching Paul work, he was just 1,000 times faster. I consider myself pretty fast at making decisions. He was just like light speed in comparison. And I was like, okay, this is really cool. I really dislike the pain of finding client number one, because whoever client number one is not what the company is going to be long term, right? You're just in that, let me find the first person who will pay me to do something. Right?
Yeah, exactly.
And so inevitably, I'm a pretty loyal person. Eventually, you have to go back to that person and be like, yeah, I sold you a sink, and I'm sorry, we make roller skates. And I've tried to keep this going as long as I can and pretend that I'm really good at making sinks, but we're not. And so you got to go find a sink from someone else.
I love that analogy.
Right? And I don't care what startup it is, that's almost always the case. And so I decided with the CU Wall piece, what I really loved was client 2 through 100. I don't like the mature adding the discipline around who gets a $3 stapler, right? And I don't like the that really painful first client kind of piece of it. And so I said, well, how do I create something that allows me to do 2 through 100 over and over and over again, and be really, really good at that? Because that's the piece that, that by the time you're hitting that phase as an entrepreneur, you're a little tired because it took so long to find and build a product and do that. And now you're in the scale phase. And if I can add a ton of energy and excitement and enthusiasm around that, that would be great. And so my basic idea was, if credit unions are really facing this problem of nobody really understanding, and having difficulty communicating between boards, management teams, and CEOs, this huge wave of fintech and kind of death by 1,000 cuts, where all these innovative things are stealing small pieces of their business, none of which is really discernible unless you look at it at the macro level, right? And then you try to dive down and figure out, well, who's my competitor and what do I do about it? And it's like, oh, it's 8 peer-to-peer payment apps. I don't know how to compete with 8 things, right? And at the same time, there's 8 different lending apps and 8 different mortgage apps and 8 different, international wire apps. And each one of these things is really fractionalized. And so I thought, well, if I could build a platform with this book and help CEOs have the conversation with their boards, and boards have it with their CEOs, and CEOs with their management teams, and vice versa. And instead of them having to use all their political capital on trying to explain this trend, they can just hand them a copy of the book and be like, here, this crazy guy who wrote a book on credit unions, and he's saying all the same stuff that we're telling you, but it's not me, right? And so that worked really exceptionally well. And I really enjoyed the authorship process, and that piece of it, and beginning to kind of build that. And then what that kind of evolved into, we had about 10 things that were working well, marginally well on the monetization side of things, of how do we turn this into a consultancy? How do we help credit unions actually do the work in that piece? And then COVID hit. And sort of immediately, I kind of replayed in my mind, having seen 2008 financial crisis, seeing some stuff in 2013, you see these major events, and then having been in entrepreneurs organization and worked with a bunch of other, like Jason Gaynard has this mastermind talks thing, and you get to know really intimately a bunch of other entrepreneurs. And one of the trends I saw was, every single month when you sit down with 10 entrepreneurs, someone has some massive flaming pile of crap that's going on: a trademark dispute, an employee dispute, a key customer left, a huge win, whatever it is. And someone's always panicking about something.
Yeah.
And if you get to know those people over some 10-year period of time, they always solve it. Like, not once in that 10-year period of probably 100 entrepreneurs did anybody ever actually truly epically fail and not solve whatever huge crisis was in front of them, right? And so you realize most of the crisis is made up in our heads, and that the number one thing you have to do is A, recognize the facts, B, decide to do something different about it, and then, switch gears and go down that road. And so at the beginning of COVID, I just sat the CU2 team down and I said, hey, this is going to be a 2-year thing. We're not doing speaking. We're not doing workshops. We've lost a couple clients who just kind of, really freaked out at the beginning of this. What is working? How would we shift our focus around those things and double down? And what new things do we need to start? And how do we shut down a couple things? And so we probably dropped about 40% revenue at the first 2 weeks of COVID. That 3 months later, we had recovered that. 3 months later, we were 20% up. And 2 years later, we tripled in that piece. And we got really clear on mission. I mean, nothing better than a crisis to give you clarity on mission and purpose, right? And
yes.
And so what we started the crisis with was, we help credit unions with digital transformation. What we ended with was, we want to make credit unions the dominant player with fintechs, right? And in that transition, everything became clear. We have a fintech mastermind, where we got 2/3 fintech entrepreneurs, 1/3 credit unions, that are just really building trust and common language between two worlds that don't talk, right? And that don't understand each other. And then we've got this product called FinTech Launch, where we just help fintechs get their client 2 through 10, really efficiently, And then my favorite one we did was we called a couple hundred credit unions and said, hey, we can't do speaking and workshops anymore, which is really where we evangelize about a lot of these different fintechs and what's going on out there. How about we just call your credit union personally once every 90 days and we just pitch you 5 fintechs in 30 minutes and you tell us if there's any you're interested in. And we had 199 out of 200 credit unions said, man, that would be awesome. You're basically vetting things for us in advance. And we don't have to spend 5 hours talking to 5 fintechs who are then going to pursue us, till the for the next 6 months trying to sell me something. I only talk to the ones that I'm really interested that fit my strategic plan now. Awesome. And so those kind of pieces, along with some custom coaching, basically really created CU2 as it is today, and allow us to really successfully take a fintech, introduce them to the right set of credit unions, finish productization, finish pricing models, figure out their marketing qualified lead metrics, sales qualified lead metrics, and really scale that up much more efficiently. And for the credit unions, we can bring 50 or 100 credit unions to the same platform much, much faster than if you're trying to get them one by one, right?
Yeah. You mentioned helping fintechs grow. Why do you feel so many struggle to scale?
Scott, could you design a video game?
I could make you a hypothetical one. If I took some random genres, mechanics, maybe blended them together, and created a new hypothetical game.
Now that would make a great podcast.
Undoubtedly.
So what would you make? Something original and exciting? A Dark Souls city builder? A co-op roguelike?
Everything. All of that. We could use the Nemesis system and put it in a first-person shooter. And we could have a loot system with survival mechanics and motion controls. And maybe you could... I don't know, save a kingdom from some out-of-control toasters. What about party?
Catch the Gaming Blender on all your favourite podcast platforms.
Well, it's a classic entrepreneur, challenge, right? Which is, you've spent all this energy on getting client number one, right? And you don't really know if the pricing model is right, if you're leaving money on the table, if you have the right team, if the product market fit is correct. And so, and then what we find, there's 3 things that consistently demonstrate a high chance of success, which is the person's been an entrepreneur at least one other time.
Okay.
Second, if they've already got their first credit union client, and the third is if they've raised money. If they've nailed those 3, then their chance of being able to absorb the growth rate quickly is really. Let me take a different angle here. One of the first things I thought when I was first an entrepreneur in my early 20s was that if I was successful, I would not have to change horses, that my team would be with me through the entire ride. A couple years in, after we had doubled every year for 4 or 5 straight years, I was like, oh, it turns out whether you're successful or you're failing, you're going to have to change horses, right? Because people can't necessarily, who you hire on day one to do a task isn't necessarily who you need 3 years later.
Yeah.
Right. And so once I kind of realized that the outcome was the same, that my job was really to make that a respectful and high integrity transition and exciting thing for everybody involved, almost like an experience, as opposed to, hey, we hired you to make sinks and you're really good at making sinks, but it's the same problem with that first client. You got to go back to that first employee and be like, yeah, we're in the roller skate business now, right? And I know you're amazingly good at making ceramic sinks, but we need people who are really good at putting wheels on things, right? And either you've got to transition over to this, we'll help you do that, or I need to go find someone who can. The person either is going to say, hell yeah, sign me up for the training, or, I'm not really interested in putting wheels on things, right? And if they're not interested in putting wheels on things, that's fine, right? Like you have to be true to what the thing is becoming. And,
exactly.
And I think if you've done that doubling every year for 2-3 years, you have this existential problem, which is you went from sinks to roller skates to roller blades to battery powered roller skates.
Yeah.
right? And in those 4 transitions, that poor person has been asked to reinvent themselves 4 times.
Sure.
Right? And people only have so much capacity for that.
Exactly. So it's clearly important to understand the market fit. You've mentioned this a few times. What's your advice for businesses in this phase?
So I think certainly for fintechs looking to partner with credit unions, understanding there's two big pieces I end up coaching on. So one of which is most people come in and think of why people are in business as for-profit organizations, and so therefore they approach credit unions with, "Hey, here's something that's going to make you more money," and in most businesses, if you think about the motivation, it's kind of net income. Personal gain, customer satisfaction, then balance sheet, right? It's kind of the long-term exit strategy or something in that regard. Credit unions, because they're nonprofits and they sit on capital, or they're not-for-profits, I should say, not nonprofits. They look at the world backwards. So they tend to think of it as, what's the balance sheet problem that the regulator is pushing me on? Either I have too much deposits or too much loans, right? And I've got to fix that ratio. That's the first criteria. Second criteria, because none of the employees own a piece of this thing, right? Their only way at really improving their lot in life is either to get an increase in pay, which usually comes through efficiency and performance, or to work less, right? And be able to do more on behalf of the people, which is, again, an efficiency thing. So so their second big criteria is employee satisfaction, employee life improvement. Their third thing, because they're mission-driven organizations, is the member impact and how it's going to impact your average consumer. The last thing is net income, right? And if it meets the first 3 criteria, the fourth thing has to, that can also be true. Then that's great. And so when you look at that dichotomy of what most businesses are designed for versus how credit unions look at the world, there's a mismatch in what we think the audience actually is interested in, and you have to reframe that in the eye of the customer. The second big piece that I always like to talk about is if we think about your company as a movie, right? Movies have story arcs that are related to the core character. So the mass, if we look at the Hollywood hits, they always follow the same basic formats, right? Of comedies, of tragedies, of dramas, of actions, right? And anytime a producer changes from that core trajectory, we hate the ending, right? Because it doesn't match our expectations. And so there's 12 different archetypes. It's really important to understand, if you're Indiana Jones, right, you're the guy who has to ascend the big bad evil thing, right? And if you create your launch story and your vision, most of the time what happens is the entrepreneur goes, "Hey, this cool thing just happened. I just hired my friend Bob and I convinced him to come on board. And then I signed this client for making sinks. And then, we raised a little capital, and then we hired employee number 4, 5, and 6, right? And then it happened to be that we signed customer number 2 who wants roller skates. So now I got two clients." And as you look at this, they release these things completely out of order, right? In terms of that story arc, what they release is each one of these successive things that they've been working really hard at and they're successful at. And if you're the audience watching this movie, it's like reading a Harry Potter book, chapter 1, chapter 4, chapter 19, chapter 2. Like, it makes no sense, right? To the outside.
I'm loving these analogies.
Right. And so the key part of that first 3-4 month launch is really to announce nothing and to be in stealth mode. And then once you're out of stealth mode, put all of these great things that have happened in the order of the story arc that makes sense to your hero's journey, your sage Gandalf person, whatever it is, because that's how your audience is looking to digest it. And if it follows that, it resonates and it creates brand accretion and loyalty. And if it doesn't do that, then it goes the completely other way, and it actually devolves into, oh my God, I don't know where this story's going.
So interesting. I've got a question.
Yeah.
So you're a serial entrepreneur. How do you come up with your business ideas, or are you more of an implementer?
I am. So I think there's 2 phases. I'm really good as an implementer, integrator for the first 10 million of revenue. I'm a complete visionary once I get past 10 million in revenue. I don't know why that is. I just know that there's that two-phase piece of it, and I have to get out of the operational discipline, as the company begins to scale. Most of my ideas are the result of conversations, interactions, and kind of riffing with friends, other entrepreneurs, bitching about something, and they just come out of that. And then usually my test is sort of designing a solution to that problem. And I always say, like, what you really want to do is put the solution down on a piece of paper, the problem and the solution. Do not put a price on it. Do not put any other details about it other than like, what it is and what you think the problem is, and define the why as much as you can. And then put that in front of 5 or 10 people. Your friends will all lie to you and say, this is amazing, right? You should do this. Or, however, if
I need to get new friends, clearly.
Yeah, exactly. I should say, and your family will tell you the truth. Unfortunately, they'll lie to you the other way and tell you all of them are bad ideas.
There we go.
Right? They're all bad ideas, like every other idea you've had. But the real test is, if not one person says, how much will this cost? Then it actually has no value and no one's willing to pay for it, in which case you don't have a business, right? You have an interesting idea. And so that how much test, to me, once I figure that out and get that kind of early stage prototyping done, then I start really refining and coming up with MVP and driving into that next phase of things.
Is there anything else you do to choose which business ideas to pursue and which not to?
So one of the other exercises I do tend to go through, and again, it depends on how you're creating the business, is trying to really understand, is the market big enough, right? Because one of my early ideas, I built this networking group of chief technology officers of credit unions called Credit Union Chief Technology Officers. We got 25 people in. Everybody was paying, I don't know, $1,000 a year. It was kind of a side hustle. And I went and did the math and said, well, if I crushed it and got 7% of credit unions to have their CTOs involved in this networking organization, it turns out it worked out to like $150,000 a year.
Okay.
Right.
Okay.
At which point I went, okay, that doesn't actually have any potential.
Doesn't make sense. Yeah.
Yeah. And so I think understanding what market you're going after, how big it is, and that what I call the 7% test, right? Like, is this big enough to actually, that if I got 7% of this market, because at 7%, you start to have some different dynamic market forces around pricing, moats, key intellectual property, and those types of things. So could I see it getting to 7% of that market? And then the second piece is, how much capital would it take to get to 7%?
Yeah.
And is that something I think I can go get?
Okay, love it. Have you seen any trends in the businesses that have been a success and those that haven't? You mentioned those that have gotten funding, have gotten signed up one credit union. Is there anything else in business in general that you've seen to be a trend?
It's the person makes a huge difference, right? Like
always,
like I wish it wasn't the case, right? But there's something where that killer attitude, and that, I'm going to be irrational and try to do something that everybody tells me I can't, over and over and over again. Right.
Yeah.
Those folks, that's a trend I consistently see. Is there anything specific in a person? Is it motivation? Is it inspiration? Is it quirky? Is there anything that you've noticed where you're like, yes, you have it? I think it's probably the ability to dream big, but to focus, right? And focus is, this took me a long time to figure out. For me, was focus isn't about what you're going to do; it's about what you're not going to do. Because it's really hard to say yes. It's easy to say yes to everything and to work really hard. It's really hard to say that doesn't fit. Sinks aren't my thing. Right? Like, I can't get passionate about that. And as much as the emotional pain is to accept that I'm not going to be the sink guy, I got to go have those tough conversations and do that. That's probably that big vision plus the focus and self-awareness, I think, is a huge, that emotional intelligence of really realizing what you can and can't do and who else needs to be on the bus with you. Those are probably the biggest things that I see people struggle with early, where they're either trying to do it all or not. They have trust issues, or those are the things that have held me up.
Kirk, so helpful. Thank you so much for being on the podcast. First of all, I've learned so much. I feel inspired personally, so thanks again.
My pleasure. Yeah, it's awesome.
Where's the best place for listeners to reach you?
Yeah, absolutely. You can reach me on LinkedIn, just Kirk Drake out there, or you can always email me at kdrake@cu-2.com, and I'm pretty responsive there too.
Awesome. Thanks again, Kirk.
My pleasure. Have a good day.
Thank you for listening to this week's episode of Talking Success, Connecting the Global FinTech Community. Feel free to follow us on LinkedIn at Talent in the Cloud. And if you're interested in exec talent, expanding your team, or you yourself are looking for a new, exciting change in your career, check out our website, talentinthecloud.io.